Wednesday, November 6th, post-election day. We've had lots of excitement. The market gapped up to a new all-time high, so lots to discuss today. Hello, Harry. How are you doing?
Good. How are you, Pete?
Things are good. I'm just looking forward to getting out of this damn trading range that we've been in for the last few weeks. I want some movement here.
Yeah, we did.
And one thing I can tell you from trading in 2016 is we can expect lots of movement. So Trump is someone who speaks off the cuff. He loves to do lots of press
Getting a bit of an echo
conferences.
there from you, Pete.
Okay, let me see if I can correct that. Okay, Harry, you might have two browsers open and be hearing it twice.
Let me see
But
here. Possible. I don't see it, but it seems to be gone now anyway.
All right. Well, in any event, Trump is going to say lots of things off the cuff. It's going to be everything is chugging along beautifully, and then all of a sudden the S&P futures drop 20 or 30 points, and you're wondering what the hell was that? Well, it's probably something he had to say. It could be related to tariffs or taxes. Who knows what it is? It could have to do with his big red button. uh, I would tell you that the first probably 6 months or so, you're going to see some bigger reactions, and then eventually the market will start to settle in a bit more, and it'll get used to some of these comments.
Yeah, I mean, it's an interesting double-edged sword, right? Where you have, as day traders and as short-term traders, we love volatility, obviously, right? That's the key to what we do is these these large sort of volume-based moves. But we love volatility that stays within the bounds of technicals. And so, one thing I recall, certainly from the 2016, 2020 Trump era, was that at times technicals could be undone with a tweet. So, it's a little bit of a, we're going to have the benefit, as you said, of a lot of volatility, a lot of movement in the market. But obviously we have to realign some of our technical expectations on some of them.
Yes, we need to be aware most definitely when he's holding a press conference.
Yes.
And so we can also monitor his Twitter feed. I suggest that. That's always a good thing to do. Let me go through our recent picks. I mean, my bias right now has been that the market's going to tread water, possibly head higher after the election. That's what it's done the last 4 of the last 6 times. 2000, we had a little bit of uncertainty, so the market initially moved higher, but then as the counting of hanging chads started to drag on, the market sold off. But the initial reaction was positive. And 4 other times we've had a positive reaction. This is a relief rally. And it really didn't matter so much who won. I know there are going to be people who doubt that, but this has happened through Democrat and Republican wins that the market has moved higher after the victor was known. The one time that it didn't was in 2008 when we had a financial crisis. So we were right in the heart of it as well. So the market, once the election was over, it tanked. And so the market has been able to hold the gains right now. You can see that it's right up near the all-time high and the high of the day so far. We have a higher low double bottom. We have a bullish 10p cross here. So I'm going to be watching for a breakout to a new all-time high. And I'm going to set an alert right here so that we know about it when it happens. But the price action looks pretty good. If they were going to smack this market into oblivion on a gap up to a new all-time high, it would have already happened in the first half hour. But you can see we had a little bid check, and then market came right back. Another bid check, higher low, market came right back. So my suspicion today is that we are going to take out the high, and we're going to continue to float higher. So
I agree
let
with
me
that.
real
I think that's
let me real
exactly
quick
right.
take it.
I just want to add to what you were saying, but historical. Everyone should, keep an eye on the final results for the House elections. The market tends not to like when you have all three branches, when you have the House, the Senate, and the White House all the same party. They tend to actually like political gridlock a little bit more, where nothing is going to get done because any policy, whether it's a tariff or corporate tax or whatever it is, could have far reaching implications on earnings, on companies that the market would rather, things sit in limbo than a bunch of new policy initiatives getting passed, unless it's a very clear, market beneficiary policy initiative. So keep an eye, if you're looking for something to keep an eye on the next couple of days, where those house races end up. If it does wind up to be a Dem House and a Republican Senate, then it might help bolster this rally. If it turns out to be a Republican House, Republican Senate, it might put a little bit of a wet blanket on it.
I'm going to knock through some picks real quick. These are from my recent videos that I've had on Sundays or from the live events the last 2 weeks, in no particular order because I can't remember when I highlighted them. I was really only focused on the long side. I felt that the probability of breaking out to the upside was better than the probability of having a sell off after the election. I've gone through all those reasons, but truth be told, I didn't really like the pullback that we had Friday and Monday. So I would have been flat with overnight swings, looking to re-enter them now that we have a clear breakout. CLS was one that I highlighted, I believe, 2 weekends ago. You can see this nice breakout here, lots of continuation, really nice pick. Let's see. Last week I showed you RDDT. That was off of that long green candle. We had a pullback. Half of that long green candle was preserved. And here we are making a new high. Let's go into the 30-minute chart so you can see price action has been nice. I like RDT for a very long time
Yep.
period. I'm talking months. Okay. So, as a long term investment, this is the type of breakout where you can add, wait for a dip, brief and shallow. Yes. Coming back up to a new all time high. Yes. Confirmation, add. That is the cycle and the process that you use on a long term basis for a stock like this. But I like it longer term.
And pop over to
Uh,
the
eh,
D1 on RDT there.
okay. Yeah.
Um, I just want everyone to notice there, you see this huge gap up. I assume that's an earnings gap up there. And when you see something like that, you're gapping up, whether it's from earnings or news based, and you're hitting this new all-time high here. Can that gap up be sustained? Right. That's the first thing that investors are going to look for. Right. They're going to look. Can this be sustained? Can this be held? And you see here that the following day it pops up a little retracement, pops back down a bit, but then that gap holds. Right. So you're looking at Monday, this past Monday, 2 days ago. That gap holds there, and then there you go. You go back up again, and that just it did not take long. And sometimes you have this long compression there. You need a lot of evidence for investors to go, okay, this is the new price level. This is the new level of support. Our new support on this stock is now 105 or 104, wherever that gap starts. It did not take much here. It did not take much to convince investors that this gap up is going to hold. And here you have above average volume pushing that stock up. So that's I absolutely agree. It's a great medium term, couple of month out term hold. I think as long as the market holds, the stock's going to be great.
And so here's a tactic. You get this big gap up, and I know this is an issue for everyone, myself included. Oh man, that stock is so hot. I can't chase it here. I got to see what happens here. Is this gap going to hold? What's going to happen? So, right click, go down to create alert, select trade signal. And in this case, I've got M15 highlighted. So you would set that alert, and here's what happened. Okay, so the stock kind of waffles around, and you get a little bit of a sell signal here, and then an exit, and here's your buy signal. So when you finally get the buy signal, you're evaluating what did the stock do while it was digesting these gains? Did it pull back hard? Did it pull back a little bit? Yes, it pulled back and just checked that open right there, not even. So it made a higher low. Yeah, this is a good buy signal in here. It's got relative strength. That's how you can enter the trade without feeling like you are FOMOing into it. You set these alerts. So RDT, RDDT, CLS, we've gone through those. TWLO, that was a stock that I highlighted. Let's see, Monday, Tuesday, Wednesday, right in here. So this is in my Sunday video. This stock has gone up really nicely. And I'll let Harry get to his pick in just a second. Last week, when we were talking about, hey, the elections are going to be taking place by the time we do our next live event. If I was going to take an election type trade, I think FXI would be a good short because I think China is overall going to be weak. And if Trump wins, I think that they are going to have some tariffs imposed upon them, and that should garner a negative reaction. And you can see the drop right there. Plus, I didn't feel like there was a lot of upside to this because China's economy is struggling. So that was another reason why I felt that this is a pretty safe put play. Yesterday would have been the day to put it on before the election. And Harry's pick was Dell, so I'll let him talk about
Yeah.
that.
I did pick Dell. First, I think I posted certainly in the chat room. I talked to Pete. FNMAT, Fannie Mae. I talked about before the election. I said if Trump wins, that is going to be a huge beneficiary. It was in 2016, and today you could see immediately while all stocks drop, that stock is up 60%. It is now at $7.15. Still a relatively cheap stock. And if history again is any indication, that stock can go to 10, go to 12. So if you're looking for a cheap stock to get in on, that might be one that's going to be a beneficiary of a Trump presidency. Looking at Dell, I really like Dell. It had everything that I generally look for on the daily chart, which is, you can just go back to the beginning of, October 11th, right? So it breaks through its final SMA resistance barrier. And then it hangs around there for quite some time. And in the week of October 21st, it kind of spends that week testing that barrier at the SMA 100, dipping below it for 2 days, then coming back above it. Eventually it holds. And coupled with the news out of probably the stock tragedy of the year, SMCI, this company is going to be a beneficiary of that. They're a direct competitor. Any drop in SMCI could lead to more customers for Dell. You get this pop. And on Wednesday, which is when I picked it. So I picked it. It was around 130, 36.91. So whether you sold it tomorrow out of an abundance of caution with the election, or you held on to it, took a bit of a risk, you're in profit today. I am actually ready to give my pick of the week early here, and my pick of the week, and I gave this, and if you were a member of One Option, you would have got it in the chat room earlier this morning when the stock was $3 cheaper. By the way, the option stalker is working amazingly well with Ameritrade or Schwab now. And so for those of you who had, who were Schwab customers and had issues previously because Option Stalker did not have the API due to Schwab's difficulties with that. That seems to have been resolved. It works smoothly and perfectly here. So if that was what was holding you back, it works great. My pick is Amazon, and it's for several reasons. One, pure technical reason. You just look at the chart. Amazon breaking out today. That 200 barrier on Amazon is not just a temporary technical barrier. That is a barrier that goes back, all the way to 2021. This thing has been building up pressure because every time it gets to 200, fucking Bezos comes in and it's like, yeah, I'm selling. I'm selling. And he did the same thing last time. He sold. But the thought has always been that once it can break through that barrier, once it can establish 200 as the new support, right? So 200 now becomes support for Amazon. Now you have this sort of clear skies, right? Anyone who gets in Amazon, and I recommended it at 203.70 when I recommended it in the chat room to Smarting. Anyone who's in Amazon right now or got in Amazon is in profit. It's as simple as that. If you bought Amazon at any point last year, 10 years ago, 10 days ago, you are in profit right now, which means there's no reason to sell. You're not holding a bag. You're not, unless you're going to take short-term profit. That, when you think of in terms of institutions are going to be holding it. And you can look at the volume. You have where that support is. I love Amazon right now. Even though I recommended it at 203, I'll still recommend it at 206.
I love it. That is a great one. Here's a pattern that I really like is when you have a buy signal on an M5 basis, stock makes a high of the day, backs off a little bit. You set an alert at that high of the day, and the next day, if the stock is able to get through that prior day's high, we already know that it's on a buy signal. It gives me the confidence to buy the stock earlier in the day, especially when it's got heavy volume and a D1 breakout like Harry just mentioned.
Okay, let's see if
So,
we have any questions.
yeah, what is JPM's take on Tesla right now is one question that I see.
I did actually get that. Um, I mean, here's the thing, and you always got to take it with a grain of salt with them because there are some. It's not always. You'd like to think that a lot of times institutions are going to be just cut and dry and logical. JPM does not like Tesla. They never have. They never will. They just don't like the stock. But so obviously, and I did speak to someone there this morning. I called them, just asking them generally what their view was of this gap up of some of these stocks just taking off, like Tesla, like Bitcoin, MSTR, for example. Um, they feel that Tesla was overvalued yesterday, so they certainly feel it's overvalued today. However, and remember what Pete and I always say, things are bullish until they're not, which means you can have all that info. That's great. And if that info gives you a bit of caution, gives you, you know what, I'm going to moderate my trade size a little bit. Great. But it's bullish. There's no doubt. The stock is bullish. The price action is bullish. And that's what you should look at. It is a bullish pattern at the moment, and it's obviously bullish because of Elon Musk's connection to Trump and the election for today. But will that continue? Personally, I wouldn't swing it, but for a day trade, it is a bullish stock.
Yes, and you can see how choppy Tesla is too. It's a very newsy stock, so everything can be chugging along just great. You think, oh, here's a nice move. Oh, look at this. We're getting within striking distance of the high, and then woof, you get this big drop right in here. So it's pretty choppy. I think that Tesla gives you lots of opportunities to get long. And I wouldn't chase this. I'd keep an eye on it for a couple of days. If you get any kind of test back here to this prior high, which is at 273.50, the open basically of today, I think that would be a really nice entry point. So if I see something like that, click, 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 click. I'll put my alert right there. I've got an alert line there. If the stock falls below it, I'm going to know about it. And then I might be interested in looking to enter it on a pullback.
Got a quick question on mine here from about Reddit, Pete. Um, you often say that a stock has moved rapidly away from the M812. I use the 15, same difference. It could be considered overextended. Is that not Reddit right now? I'll just add briefly, you had an earnings gap in there. And when that happens, you're going to get a sharp slope up on the EMA, because the EMA is just a front weighted average, right? It's an exponential moving average instead of a simple one. So it's going to be heavily weighted. And so you get that spike up. And what you're looking for is the slope of the EMA, right? If you could look at the slope and you could just draw the line, look at the slope, and the slope of the candles aligned. And if you look at Reddit, they are, right? You have a similar slope here. What you don't want is when the slope of the candles is actually getting extended away from the slope of the EMA. I don't see that happening here on Reddit because of that earnings gap up. You have an extended slope, an exaggerated slope on the EMA. So that's my answer to that.
Right. And the objective was to buy a dip. You had a dip here. You were able to evaluate it. It gets back above AVWAP-E. This is all nice stuff. That's a good entry point for you. So, where I think a lot of traders make a mistake is, first of all, when I told you I like Reddit, I told you I like it for a very, 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 very long time. So we're not talking about a 5 minute day trade or a 2 day day trade. This is something you can scale into over a long period of time. And so what you're looking for is brief and shallow pullbacks. Okay. Let's say that this was part of the move I was looking to capture. Okay. So you've added in here on a breakout and you get a little bit of a dip. Okay. It tested the EMA 8. All right. We got through that. No deep pullback. Okay, this is where I could enter right here because we're making a new relative high. That's the same type of thing that you're going to be looking to do in Reddit. And I believe that over time, you're going to see this move actually accelerate because this could be very early in the stock's move because it is a relatively young company. The IPO is less than a year old. And typically, when these social platforms and technology stocks get going, after the IPO, it takes 8 or 10 months for the stock to kind of waffle around and get its sea legs. And there you can see this is the price history, all of it, cup and handle, breakout. Then once it starts to get kind of that critical acceptance amongst many asset managers, the stock gets hot. They like what they see. And that's when you start to really gain some upward momentum.
Pete, I remember the last time, well, you've had a couple in between, but one that sticks in my head. I remember back in February of 2021, you had told me and then told everyone in the chat room that you liked Mosaic, MOS, Potash, for a long term hold. And you were suggesting roughly a year and a half hold. And at the time, I think the stock was at around 26, 27. And over the course of the next year, that stock went up to $75. Obviously it's retreated back, but in terms of a year-long hold, I remember when you were talking about Mosaic and that stock tripled in price after you suggested it.
And so, yeah, I do remember that. The stocks like Reddit, I mean, I've watched this in Facebook and Google and Apple and all of them, and they kind of go through this pattern, where they've compressed for a long period of time, and then you get this big gap up. And then that first move, and if you go back to NVIDIA before it started to get really, really hot, you're going to see this similar type of price pattern. APP, that was one I gave you a month ago. That was a classic one. And I said, you don't have to wait on this one, folks. Okay, get a starter off on APP. This thing is going. When I see that, and this is a longer term breakout, put the the weekly chart up. You can see that breakout there and how it's starting to really gain momentum in here. That's a sign that buyers are lined up on this. So that was a daily chart. Love those stacked green candles on massive volume here. And look at that. It's still going. That's the kind of thing that I'm expecting to see in Reddit.
Is there, let's see here. So when you put on a starter position, does it make sense to open positions in two separate stocks with good technicals in case one stops performing or one performs better than the other? I'm going to guess, Luke, that you're the type of person that will date 3 or 4 people in case 2 or 3 of them don't work out. You always have one that will, right? And then what happens when you do that? You never wind up with anyone. But the analogy falls apart when you consider when it comes to stocks. Uh, if it's a good trade, it's a good trade. You don't do other trades. Don't buy other lottery tickets just in case the one you bought doesn't work. If you have a good trade on and you see another good trade, you should do it. You shouldn't do it because just in case the first trade fails, this is a backup. You should do it because it's a good trade. Consider each trade individually, irrespective of your other trades, unless you are intentionally hedging a portfolio of positions. If you're, for example, right now you're looking at this huge gap up in the market, you're at an all-time high, a lot of stocks are going strong, you might be long like 5 or 6 different trades, and before the day's out you might look at that and go, well, if I'm going to swing this, I want some downside protection. Totally reasonable to put a hedge on there. But based on what you're saying, good trade is a good trade. Don't worry about trying to cover other trades with it.
100% agree with that. Every trade has to stand on its own. And let me take a look at, does OSP, Option Stalker Pro, does it connect with IB? Yes, it connects with IB, connects with Tradier, connects with Schwab. And we also have an Intrinio data feed that is real time, but only from the IEX exchange. And I am currently using Option Stalker Pro with the Schwab API.
Yep, works great. And you guys put a lot of work into getting that together, because I know Schwab certainly was not an easy partner, so to speak, to work with in getting that API together. But you
It
guys
was
did it.
certainly not a priority for them.
No, no. But you pushed and pushed and got it done. Here's a popular question that we get pretty often. When a stock is making new highs, how do you decide when the time to take profit is? I struggle with the won't go broke taking profits and end up taking them too soon a lot of times. I hate that saying. You'll never go broke taking profits. Well, if you take larger losses than you do profits, you will go broke. Your question gets to the heart of what a lot of traders struggle with is you would really emotionally, you're saying is you have some PTSD in there of plenty of times where you were up on a trade, you bought a stock, it went up, everything's good, and you're like, you know what? No, this time I'm going to ride it. This time I might even add to the winner, and then bam, it reversed on you, right? And now all of a sudden you're in a loss when you could have taken a profit, and so it sticks with you, and it happens enough times, kind of like bad beats, in poker, that you become gun shy, and the moment you hit a certain profit target, you jump out of the way and you're like, I'm out of here. There are different ways to deal with that, right? I mean, obviously a conservative way of doing it is, let's say you entered Amazon at 204 and now it's at 205.85. Okay, I'm going to put my stop at 205, right? Guarantee myself $1. Oh, now it's at 206.85. I'm going to move my stop up to 206 to 206.50. I'm going to move my stop up to 206. Now I guarantee myself $2. You just keep moving that stop up. That's one way to do it. My opinion, the better way of doing it is the technicals are there for a reason and they move, right? So you're starting off on a stock like Amazon with your daily technicals of, all right, I obviously see a low here, a high of yesterday of 199.82, 200 is support. That is where you're going to kind of hold the line, or you could look at the previous all-time high of around 203 or 202. But once you have this sort of huge move and you say, all right, those technical levels are too far away. I got in at 204. I don't want to risk losing on the trade. Then you go to intraday, right? Right now, as long as it stays above VWAP, if it stays above intraday VWAP, keep the trade on. If it drops below VWAP, then you get out. There are different ways you can shift your focus when you're in profit on a trade, from daily to intraday to moving your stop up. It all depends on your mindset and mentality.
And if we're looking for a good entry point, oh, gee, look at that run up. Oh, I'm not going to chase this on post election day. I will wait for a pullback. I haven't even looked at HA reversal, but you've already got a trade signal buy here. You could have set that alert, could have set an alert for VWAP, meaning that the stock would dip below VWAP and then close above VWAP. That would be a good alert to set. You can set a number of them. You don't have to just set one alert. But let's take a look at using HA reversal. And so you've got a flat top red right there. So it's activated. Now you're waiting for a flat bottom green. You would have gotten it right there on this candle at 11:30. And when you take a look at that 11:30 candle, this is kind of your entry point right in here. You go, oh, wow, the pullback was so brief and shallow that it didn't even get back to VWAP. Yeah, this looks like it'd probably be a decent entry point, and the market looks good. So, knowing how sensitive each one of these variables is also helps. Let me show you how easy that is. Right click, create alert, use the drop down, HA reversal, M5 bullish, add it, and forget it. So if we get an HA reversal while we're doing this presentation, we'll be able to take a look at it because we'll get the alert.
Someone asked about the data feeds on the bottom there for you, Pete, on Option Stalker.
Okay, live data. Well, the easiest way for live data is to have it through a broker. I don't want to be a data vendor, and so that's why we offer Tradier, Interactive Brokers, and Schwab. Those are the three largest online brokerage firms with really decent commissions. For those who don't have one of those three brokers, we do have the free Intrinio feed that we use. We provide it. It's real time. It's not consolidated. It's only the IEX exchange. So, although it has limitations, I feel it is perfectly fine for anyone that's swing trading and maybe monitoring the markets from time to time intraday. If you're a full-time trader sitting in front of the screen all day, you're going to want consolidated real-time quotes.
Someone quickly asked about, can you talk about the TLT, specifically long-term bonds, how election affects the price? I mean, look, TLT is it's tracking the Treasury bonds maturities that are exceeding 20 years, right? And so its price is going to be inversely related to long-term interest rates. When rates rise, TLT price typically falls, vice versa. Basically, the more that the market anticipates increased budget deficits, potentially raising treasury yields, then you're going to get sort of a negative impact on the TLT price. But it's not just, you're talking about the election, it's economic, inflation, global events. A lot of things will go into the pricing of bonds. But if you look, on a tip and you map it on a typical day, when TLT goes down, the market's going to be going up, right? So, you can always have that chart on and you're looking and you're seeing, well, right, TLT on a daily or, for example, right now, if you look at the M5, it's heading back up over VWAP. It's heading into the gap from where it dropped today. Could that indicate that the market is about to take a little bit of a pause, a little bit of a breather? Sometimes. How do you use TLT, Pete?
Well, there are times when I feel the market is more sensitive to moves in TLT, and the time was definitely when the Fed was tightening, tightening, tightening. And then there are times when the market really doesn't watch TLT as closely. And with higher interest rates right now, what's interesting is you'll see this big pullback in TLT. Much of this move corresponds during the last 2 months when the Fed said, hey, we're going to be on an easing path. We are lowering interest rates. That is what our tendency is going to be from this point forward. But then you see this drop in bonds, which means that yields are actually increasing. Whoa, wait a minute. Fed said we're going to be cutting rates, yet interest rates are moving higher. What gives? Well, there's a bit of a disconnect, and I believe that disconnect is the fact that they have to refinance $7 trillion in debt in the next year. That means that there's going to be a huge supply of bonds coming. When you have a huge supply, it's going to put downward pressure on TLT. So investors are going to demand a higher yield. And as for today, that big drop right in here, yes, Trump does have some pretty big deficit spending plans. We'll see if they pan out, as far as them actually being good investments. But the notion here with this drop is that we're going to be issuing more bonds.
Makes sense.
By the way, if you look at this, these are the buy and sell signals. You can see them on TLT. That's a beautiful little short right in there. Ooh, that's a nice little buy right in there. Hey, what a great sell signal. Ooh, looked like a little buy signal here yesterday. So obviously we're breaking below this horizontal support. You'd hold off on that one, but in general, you're going to see some really nice trade signals as I flip charts.
Someone just asked us about Meta, which is, I agree, interesting. Meta, basically, one of these kids is not like the other. Um, if you look at Meta's price action today, it is down a decent amount too, and particularly when you consider how much the market is up, that makes it even that much more startling. I can't see, and it doesn't mean it's not there. I've searched, but I can't see any news that is causing Meta to drop here. But it is certainly the anomaly. If you were to just play the price action, I wouldn't short it here because it's coming up to and bouncing off the 50 SMA on the daily chart, and it also has some downward sloping trend line support that comes off of the bottom of October 8th. But it certainly is something to keep watch of. If it falls below the 50 SMA and closes below it, that, for those of you who might have a lot of longs in your portfolio, let's say Meta closes below the 50, that might be a good hedge there, but it does stand out as an anomaly today.
I'm going to run a quick search that I had this morning. I could have looked at a number of searches that we had running, but I thought, well, here's pretty basic search. Show me a stock that has relative strength on a 5-minute basis. I ran this earlier in the day when the market was pulling back. Show me a stock that's on a 5-minute trade signal. Show me a stock that's greater than $20. Show me a stock with good option liquidity. I don't want any ETFs in here. On a gap up, I'm going to get all sorts of stocks to look at. So I want to filter out ETFs. Relative volume. Show me something that has 20% greater than its normal average 20-day volume. What is making a 20-day high? That would be a nice stock to look at. So pretty basic search. These are your results. You'll see Amazon is near the top of the list. There are a number of others. ALK I just clicked on. And you can see that's a beautiful little breakout right there. And take a look at the 5-minute. You can see the nice steady grind higher, not a lot of volume. PLTR, this could be my pick of the day, but Harry has been touting this stock since, I don't know, let me go back, at least August. I mean, he has been long this thing constantly. So I'm not going to use PLTR because we've already highlighted that thing so many dang times. But here's an interesting one out of this list that I just clicked on, GEV. And pretty nice. I mean, I love when I get nice tight price action like that. That is a sign of very, very steady buying. And you can see this big breakout here on decent volume, very good volume. GEV, I don't even know who they are, what they do. I can find out quickly, but I think that is going to be, let's see, electric power industry products. So they're
Utilities.
into, yes, it's a utility stock, power, wind, electricity. Gosh, why would that stock be up? I
I don't
wonder if it's
know.
General Electric, probably wind power generation, I would imagine, but that would seem contrary to the Trump uh
You would
frack,
think.
frack, frack agenda, right?
I mean, yeah, but it clearly has broken through that upward trending trend line and broken through resistance there. So, I mean, it looks good. It just it wouldn't be what I guessed, but it's there.
No. Yep. So trade what you see, not what you think.
Exactly. Um, Someone also mentioned DRS as one to look at. And the reason why a stock like DRS, by the way, wouldn't be on the list that Pete just put together from that search is the volume, right? I mean, you look at this stock, it averages 580,000 shares a day, 500, somewhere around there. Which isn't to say it's not a good stock, right? If you look at the technicals on the stock, it certainly seems to be following technicals pretty well, hanging around that 50 for a long time, gapping up again. I just prefer stocks that have at least a million shares traded in a day on volume. Some exceptions, but generally, that's what I like is my low end parameter. But yeah, look, knock yourself out. It looks fine. It's just it's just too low volume for me.
Astera Labs, I had a question on that. Would this be another one of those RDD type of stocks? Well, I can tell you first off that uh, I'm pretty familiar with what Reddit is and what Reddit does. A Labs, I have no idea, but the name tells me that this is probably a biotech company, and you'd have to be much more careful with a stock like this and drawing generalizations because unless they have a diversified product line with many revenue sources, some of these biotechs, they are a one trick pony. I mean, they have everything put into one stock. And so you're going to see lots of volatility based on clinical trials. So just make sure that you're not in a biotech that does not have any revenues. Let's take a look at this. There is no PE. They don't make money. So your risk is going to be pretty high on a stock like this. Nice breakout, but you would have to, on any biotech, have a bit more knowledge on the fundamentals unless they have a diversified revenue stream across many established products. Then they could take risks with other drug development.
Let's see here. How important is volume in market analysis? Very. In the UK, to monitor the FTSE, we have the UKX ticker. Yes, you're right. It has no volume data on that. So you do have ETFs. They're volatile, but they have volume, but they're gappy charts. Well, which would you pick? I'd lead towards the ETFs for volume, obviously, because you don't have any on the UKX. But if you're analyzing pure price action, without regard to volume, the UKX, that could give you a slightly clearer picture without all those gaps there. You're at a handicap, no doubt, whenever you aren't able to look at volume. And it's not volume in a vacuum. What you really need to be able to do is look at volume comparatively. You need to be looking at relative volume. As you see, one of the things that Pete clicked off on the custom search was relative volume, because you don't just want to know, oh, it did 3 million shares today, whatever. That out of context means nothing, right? What means something is it did 3 million shares today, and on average, it does 1.5. Oh, okay. Now you know that it's double its normal volume, right? 200%. And the only way, why does that matter? It matters because what you're looking for is, as we always say, over and over and over again, institutional involvement. And how do you tell institutional involvement? Relative strength, relative weakness. And another indicator of institutional involvement is huge volume, because retail traders are like herding cats. You can't get enough retail traders to generally produce, unless it's a specialty meme stock or something, the kind of volume that would give you a 2x 200% RVOL on the day. So that tells you institutions are in there buying or selling, whatever the case may be, and that's important. If you can't get that, you are at a handicap.
While you were giving your analysis, I thought I would run another search. I would take a look and see what else is popping up. And what I did was I took out the 20-day high and I said, what's making a new high of the day right now? Anything look good? And Dash has been on my radar. And ZM has actually been making a nice breakout here. Only thing about ZM that I don't like is that it's a Chinese stock, but this breakout does actually look pretty dang good. Dash is one that I was considering putting as my pick of the day. I like this D1 breakout right here, but I don't feel that this is a stock that you have to chase. I mean, they deliver food, okay? There's no great big technology or anything. They recently had earnings. You can see that pop up right there. At that's your gap up, opened on the high, sold off all day. I believe that coincides with last Thursday when we saw a bearish gap reversal for the market. So it sold off with the market, found support, and now it's starting to move higher. I like Dash. I think Dash might be my pick of the day,
Hmm.
but I don't think it's one that you got to just plow into. Okay. They deliver food. So they're not curing cancer here. Right click, create alert, going to go in, trade alert, 15-minute basis. Going to go a little bit longer term because I'd like to have that pullback be a little more substantial. And should that happen, I'll get an alert. I'm also going to create an alert and I'm going to use VWAP. If the stock touches VWAP and then closes back above it, I'd like to know about it. And because it's already above VWAP, our servers know that. So it knows that it needs to touch it on the downside and then close above it. Then you get your alert. Pretty sophisticated alert system that we have. And you just saw me set 2 alerts in less than 10 seconds. So alerts to me are the way to trade.
We got a couple of questions here, Pete, on where do you think the market goes from here? The election just jacked the market up 2% to all-time high. Economy is good, so does only keep going higher. Don't forget, tomorrow is the FOMC, I believe, correct? Um, and that's going to certainly have an impact on things. You're an all-time high. Obviously, the rule of thumb, again, it's bullish until it isn't bullish. Where's the market going to go here? Continue going up until I see otherwise. Is there a chance tomorrow people wake up and go, euphoria's gone? Oh shit, I don't like tariffs. What the hell? Boom, everything. Yeah, you've seen these kind of big reversals that could mark the beginning of the Trump era of the stock market. It would track for me based on what we saw in 2016, 2020. But all I can tell you is we are the trend traders. The trend is your friend. Where is the trend right now? Up. Where is the market? All-time high, continuing going up. You have to unblock your mentality of it's gone up so much, it's going to reverse. I'm going to short here. That's just insane, by the way. But there are people doing it. I'm shorting Nvidia here. I'm shorting Tesla here. I'm shorting SPY here. Okay, good luck with that. All I know is it's going up. It's continuing to go up. The volume is good. The market is good. Treat it that way until shown otherwise. If you want to say, hey, I'm going to be a little cautious on swings because this huge move up, I believe, was exaggerated. So I made money trading alongside day trading, but I'd like to be all in cash. I respect that position. Totally reasonable.
Yes. Yes to all of the above. If you zoom way out, and we can go back 1 year, okay, that was the low from October last year. Why would you fade a trend like that? What is it that tells you that there's going to be an end to this and that it is going to come suddenly? Is it economic weakness? Heck no, we haven't seen that in any of the data points. Last Friday's job report was a little weak. Part of that was storms. The storms have passed. Part of that was strikes. The strikes are over. Boeing resolved their strike issues. So could have been just one week number. ADP last week was at 244,000 new jobs in the private sector. Great number. GDP 2.8%. So PCE deflator, little hot on the core side, not bad. Not enough to cause concern for the Fed. Fed has stated they are in dovish mode. Okay, well, that should be bullish for the market. Earnings season, it's been excellent. Okay, we didn't have go go reactions to Microsoft and Google and the rest, but the numbers were good. And the market was right where it was back in July, except now we had an extra quarter of profits under our belt. So valuations, just by nature of that price being preserved, and another quarter of profits means that valuations are better here than they were here. This is all pent up demand, cup and handle, breakout, float higher. Market's going higher. We have year end strength. Guess what? Portfolio managers love to mark their portfolios up into year end. Very strong seasonal bias. If they do that, they make more bonus money. It's an anomaly. It's been going on for years.
What do we think of crypto plays? Coin, Wolf, I assume you could throw MSTR into that mix. Um, Nothing in life does not have the following trade off: the greater the reward, the greater the risk. Period. What do you get with crypto trades like Coin and MSTR? You certainly get large moves, right? Particularly relative to the size of the stock. I mean, hell, MSTR is up 10% today, right? Coin certainly is up, and I know Dave took a CDS in Coin, is up 26% today. Um, you get these large moves. What don't you get? What risk do you put on? As traders, our advantage is that technicals work. They work on Nvidia. They work on Amazon. You know, they work on Google. They work on PLTR even. But do they work on Bitcoin stocks? Yes, but they don't work as well. And that is where your trade off goes. Your trade off goes with your increased reward, increased risk. So, yeah, there are plenty of times. I agree with Dave's play to say today in the chat room where he took a call debit spread on coin. But you are putting on a little bit more risk than if you would have done, you do a call debit spread on Nvidia, for example, or Amazon. That's going to be a little bit more stable. More risk, more reward. You can't have one without the other.
Yeah, and coin was really nice, big volume, really nice breakout through a couple of trend lines, through horizontal resistance. This volume is the key right here. And that's why it is one of the primary variables that we use, that R vol. And I'll put that back up here for you to see. So you can adjust this number. Let's say you wanted to find a stock. Okay, I would have to remove most of these other criteria to get there. But let's say that volume is all you cared about. Show me a stock that's doing twice its normal daily volume. Okay, well, we can do that. Let's see what comes up. Quite a long list. All right, so institutions are in there on all of these stocks. Then you can start adding all sorts of other variables to whittle away at this list. Some interesting candidates on that. So yes, coin early on, loved it. Loved the tight price action. You hear me talk about it all the time. Tight, tight, tight price action. Dips are small if you even get any. That type of persistent buying tells you that this stock is going higher. Look at that relative strength. Add SPY on the chart so you can see what the SPY has done. Big dip in SPY. Stock holds its low. Here you've got another dip in SPY, stock moving higher. in here when the market finds support, you know this is a good entry for that stock. See you later.
Someone's quickly asking about IWM and saying it's up 5% today. Is that indicative of greater buying in small caps versus large caps? Well, I mean, that's exactly what it is, because it's the Russell 2000 index. So you certainly are seeing some higher concentration, but also look at the ATR, right? So the ATR, the 7-day ATR of IWM is $5, where the 7-day ATR of SPY is $7, except SPY is a $589 stock, and IWM is a $236 stock. So that means IWM's weekly ATR is roughly 2.5, 2.6%, whereas SPY's is around 1.3%. In other words, IWM generally moves more with larger swings than SPY or QQQ does. With that said, yes, it certainly is indicative of the market expanding on its breadth, and that is another indication of that this isn't just being led by the Nvidias of the world, that is some real underlying strength here on the mid and small cap stocks that are driving this market pop.
So that search that I just ran show me a stock that has 200 or 2 times the normal daily volume and is making a new high of the day. It's a nice little list. I looked at CAT right here.
Hmm.
Caterpillar looks quite good. I like this breakout. Now, it is a choppy, chunky stock. I've traded it before. Every time it looks great, it disappoints, but this is a nice breakout on good volume on a short-term basis. Yes, I definitely think Caterpillar can be traded. You can see the volume coming in right here. So yeah, really nice D1 breakout above that high plus trend line. And that dates back quite a ways right in here. That's a significant upside breakout. Yeah, this looks good. I like CAT. It could be a pick of the day. Buy dips. Okay. Caterpillar makes heavy equipment. So it's not like they've discovered something new and like you have to have it right away. There's your earnings report, negative earnings reaction. So this is all based on post election. Hey, Trump's going to be spending a lot on infrastructure or whatever it is. They're going to need heavy equipment. So that's why the stock is up right now. But I like the breakout. I certainly would like it for a day trade.
I agree. And someone just brought on another nice breakout today. And this is a stock I've liked for a while. I just like the stock, like the company. MU today obviously has a nice break above two converging SMAs. And when you have the 200 and the 100 SMA meeting each other, right? It kind of really powers that level of resistance to support. So you have this really strong resistance here, and you could tell that you had this gap up from earnings way back on September 26th. Then it begged off a bit, and it got hit with some of the semi news and all that, but backed off a bit. But then it bounces off the 50 and then comes back up again. 100 can't do it. Breaks down below the 200. Then it starts coming back, bounces off again, the 50 on Halloween, on October 31st. Stays there the next day, then pops up again. Now today, bounces above both of them. Because this stock has been having so much trouble around the SMAs, not going to hurt you to give it another day to, you also have this trend line here from the gap down back in July 17th. You can connect that to the top of 926, connect that again to 1017, and then to the top of today. I'd like to see it close above that trend line, open tomorrow above today's high. If I see that, then yes, I think you have a very nice long in MU. But caveat, close today above that trend line, which comes in at around 111.50. So let's say closes above 111.50 today. At very least, closes above the two SMAs, and then opens tomorrow above today's high of the day. those two things come in, I would definitely advocate MU as a very nice long.
And we have that buy signal here. So if MU pulls back from the high today, come back in and drop an alert line at the high of the day, and then you'll be alerted tomorrow if it takes out the high of the day, and you'll be able to watch it earlier as it approaches that 111.50 level. Watch for relative strength, and then you'll be ready to take a position, but right when it's getting there.
All right. Anything else you see there, Pete? That's
I don't think so. BMY breaking out. BMY.
hmm,
So BMY, you can already see the choppy price action. It's important for you to be able to pick this up visually right when you look at the stock. And if you're comparing it to some of the others that we've shown you, like Caterpillar or Coin, those are just in a straight line. Those are the ones that you want to day trade because you've got that type of momentum. So this one instantly, when I look at just the 5-minute chart, it tells me, okay, I don't have to be overly aggressive with this. I can buy dips on it. You can see the stock just doesn't go anywhere fast. It's trying to get through all of these trend lines right in here. Yes, there's a nice little breakout to the upside. Keep zooming out. It's a good little breakout. I can't say I'm overly excited about it. Uh, it looks okay. I mean, this is a long-term downtrend also. Is this over? I don't know. But when I see a stock down in that lower right, I'm always a little bit more cautious with it. But you've got higher lows, so it's starting to perform. You've got some major moving average crossovers. There's a 5,200-day golden cross in there. I would give that a yes. It looks like it's going higher, but make sure that you're buying dips on it.
and keep in mind tonight we have ARM reporting, Qualcomm is reporting, Melly, Moderna reporting tomorrow morning, Datadog reporting tomorrow morning, Trade Desk and Affirm are reporting, and Unity reporting after hours tomorrow. Some of these aren't really going to impact other stocks, but like, Moderna, that's going to impact Pfizer. ARM, that's going to impact everything from Apple to NVIDIA, right? And same thing with Qualcomm. So there's still some key earnings reports that are what do you call going to impact other stocks. But right now, keep an eye on them. And we did kind of have a question there. What do you typically, if you're trading, Pete, it's just you're sitting there, you're trading, you got the whole day, you got, what, 7 hours to kill there. Well, people are curious, what do you do? What do you do? You're sitting there, you're trading. I mean, are you glued to the monitor the whole time? Are you getting up, taking walks? Do you distract yourself and maybe write a little bit? What do you do?
Well, when I'm just pure trading and I'm not writing and I'm not providing tech support and working on features and all that, it's been years. I'm just going to be very frank with you. It's been at least 10 years since I've just pure traded. It's been a long time. So I have constant distractions, but when I'm purely trading, I'm flipping stocks, I'm looking at the S&P 500. I'll get up for maybe 5 minutes, an hour, reload my coffee, stretch, use a bathroom. I try and do it pretty close to the hour so that I'm regimented and getting up. I think that it's good to give yourself a break. Certainly good to give your eyes a break. So don't just be fixated for 15 minutes on the monitor. Take a break, close your eyes, give yourself a rest. But when I'm in. I mean, I don't do anything else. I'm setting alerts. I'm flipping charts. I'm watching price relationship relative to SPY. I'm entering trades. I'm watching how they are performing, and I'm taking the position off. So yeah, I'm engaged. How about you? How do you spend your day?
I mean, I take cigarette breaks. That's sort of my healthy, non-healthy break. Um, yeah, there's that. It depends. Look, obviously, there are some days where we call them low probability trading environments, right? I have a lot of alerts set. I run through them. Obviously, when you get to the point where you've been doing as long as Pete has or I have, it doesn't take us long. We look at a chart, we pretty much know right away where the alert's going to go, where it's not going to go. You run through them. Sometimes as a distraction, I'll have I'll watch a show, a TV show or something off an iPad in the background as I'm trading. But a lot of times I'm just interacting with people on Twitter, on Reddit, in the one option chat room. There's always a ton of questions from people that are coming in that both of us, spend a lot of time getting to. But beyond that, it's a lot of charting. The trading is a lot of charting, a lot of setting alerts, looking at charts, and a lot of doing searches. Pete did a couple of good searches, great searches for you guys just on this stream alone. You do enough of those searches, you get 15, 20 good stocks that you set alerts on. Out of those, maybe get 3 or 4 good trades in a day. You don't have to take them all. You get enough results that you can go through them and figure out what the best ones are. So you're flipping through those charts, you're setting those alerts, you take a couple of breaks, you distract yourself every now and then when you have that low probability time where it's just doing jack shit all day and you're kind of in this mind numbing, coma inducing SPY has moved 30 cents in the last 2 hours, droning in. In which case it's also pharmaceuticals. But that's kind of my day.
I wanted to bring to your attention Amazon because during the presentation I had set an HA reversal alert. And there you can see your flat top red. There you can see your flat bottom green. So you get the alert right here. Now you evaluate. Okay, was the dip deep, and did it last a long time? No, it was brief and shallow, and Amazon stayed near its high of the day. What was the market doing during that little reprieve? Market is ticking higher. Okay, do I still feel good about possibly taking an Amazon long in here? Looks pretty good. All right, well, as the final caveat to a trade, why don't I click here or here, or I could connect them. You know what? If we get through this price point right here and the market looks like it's continuing to float higher, it's already through the high of the day. Yes, I can take a long in Amazon and feel pretty good about it. But that's how you use the alerts.
All right. Sounds good. It's going to be an interesting week still ahead, right, Pete? And we still have the Fed. We still have, obviously, the House results. And we had a huge move today. So it'll be interesting to see how we wind up and where we're looking tomorrow.
Absolutely. And so let me talk just a little bit about the market very quickly. So this is your prior high right here. You can see if I hover over it, it comes in roughly at 586. Okay, that was the open right here. That was the previous high. The low today was about 580, 540. So we're in that range. Okay, right in here. It would be common for the market to come back and to test that in the next day or two. It doesn't mean that this gap up is a fake, that it's all over. No, we've got a gap in here that's at some point will probably be filled. May take quite a while, could even happen next year, but that's what you can expect is in the next day or two that we have a little bit of a dip in here. We want to see a low that is above that 586 level. And then we want to see when that level is tested, we want to see buyers come in and gobble it right up. Oh, you gave me a second bite of the apple. I'm not going to miss this chance. And they aggressively come in and they buy. That's when you know this breakout is legitimate. This is a good entry point for longs. I can add to my swing starter positions and I could be looking for other really strong stocks that are breaking out. So Just because we got the breakout today, don't feel like you'll never have a chance to buy again. You'll have your plenty of chances.
Yeah, shut that FOMO shit down.
Shut
All
that
right.
almost shit down. All right, Dash is my long for the week. Do not
I'm
feel
Amazon, and
like,
we're good.
and you're in Amazon. Don't feel like you have to chase anything. Gradually ease into your positions, but the market to me looks like it is moving higher. Thanks so much, everybody. We will see you next week.
Thanks.